Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Nikkei also is managing to inch towards, the 45,000 mark.
Roughly 25,000 is the big level, which should not break on the downside. What do we have? 25,280 on the Nifty. We're about a 0.25% higher.
Most of the Asian countries are 15 to 20. It needs to come back to at least that much for Indian market performance to resume.
We cannot take the pressure from the negotiations. Now, when are we going to do it?
Came into the market to raise about 1,900 crore rupees and investors have welcomed it.
We're seeing a 100-point uptick on the Nifty currently.
InstaHelp, Native, I think these are the areas where we will invest.
Gains are coming in and we have a 100-point gain on the Nifty right now.
Well, that was the day so far, and we're shedding some gains as we speak. We're positive, but clearly off the highs. The Nifty is below 25,300, up about 50 points. The mid-cap index has dipped. It's down nearly 100 odd points on the mid-cap index. The advanced decline ratio is holding up in favor of the gaining side. But as you can see, positive, but off the day's high. Hi, guys.
Hi, guys. You remember that story from childhood? The hare and the tortoise and who won the race? We've lately, instead of being the hare and trying the bravado, we've decided to be slow and steady like the tortoise. Taking steady steps, some profit taking it between, pausing for breath. Not a bad market.
Well, that's right, not too bad. And the good point is that the largest constituent on the index, that's the banking and financial names, they have found their form. Because if you take a look at the last 45 days, they'll still be relative performers. But the relative performance is because in the last 15 days, they've actually been outperformers. So the Nifty Bank finding its form, that's always good times. I think it got a couple of 100 points at 55,600 mark. That's where you get a couple of these technical levels that come in there. So it's crossed the 20-day MA. You'll want it to get past that and then lead the way from here on. But portfolios may not be feeling that good today because the breadth of the market, is not strongly in favor of the advances, and the mid-cap index actually has moved into the red. So that's why portfolios may not be looking that good, though in fact we do have, the headline index that's still in the green, 50 points up.
But mid-caps have had a good run this month.
Yeah.
Month to date, the mid-cap index is up 5.5%, while the small-cap index is up 6.7%. So yes, some profit booking is visible right now, but this is on the back of a couple of good days. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema, with me are Surbhi and Nigel. And here's what's up for you in the next 1 hour. Final hour of trade. The Nifty consistently was holding above 25,300, just dipped below that. But on the whole, it's a good day for autos, banks, metals, though, on the back foot. Urban Companies, stock of the day, stellar debut, lists at a 60% premium, holds on to its gains. We'll get to excerpts from our chat with the management. Vedanta under pressure as the centre doubles down on the demerger plans, flagging financial risks and violation of SEBI disclosure norms. Stock has taken a beating, down 1.5%. MCX is higher in trade following comments from the SEBI chairperson Tuhin Kanta Pandey, who said the regulator may permit banks, pension funds, foreign investors to trade in non-agri commodities.
Okay, all right. So those are some of the headlines that we're going to track and some of the stocks and sectors that we will track. By the way, talking about today's market, so yes, the broader market is not having as good a day as what we've seen in the recent past, but you still have themes and trends. Look at some of the defense stocks once again. They're again back in favor today. So Garden Reach Shipbuilders, some of the smaller private sector names, something like a Zentech, up about 7%, 5% on Zentech. Garden Reach is up about 6.5%. So some of these names are standing out. Look out for the tier 2 jewelers. There's a fair amount of sparkle, and we'll discuss that with Mangalam as we go along. Smaller names like a Kalyan Jewelers or something even smaller, something like a PC Jeweler, etc. Bunch of other, jewelry stocks. They are up and about. And then you have the likes of a Gokuldas Exports with the hope building on some sort of a thaw between India and US on the trade front. There is still a lot of buying on Gokuldas today, so 5% on that stock as well. So just some examples where there is action, though the overall index is a bit subdued. Now, what about bets for the last hour? Well, let's ask Mitesh. As always, Mitesh, good afternoon. Good to have you in. What do you make of today's move? What would the index trades be, if any at all? And then stocks.
Good afternoon, Surbi. So I think on the index, 25,320 levels kind of have held on. We got a high slightly above that. But we have started, getting a negative candle on the hourly and the globally chart. So I think that level will come into play. My sense is that on the index, at least book 50% of your positions. And if you get a dip back to about levels of 25, 200, 220, 180 zones, I think that's where you should fish for new entry. On the stock side, I think the PSU banks are doing very well. So I have a buy on State Bank of India. Keep a stop at 830. Look for targets of 900 over here. And the second stock, which I like, that's also a buy call on Tech Mahindra. So Tech Mahindra, is slightly slowly started drifting on the upside. So that's a buy. Keep a stock just below levels of around 1525. Look for targets of 1580.
Okay, so those are some of the names on Mitesh's list. Mitesh, by the way, I don't know if you've noticed anything peculiar or particular on Tata Consumer. It's a big mover today, Nifty winner, almost pushing a 4% gain now. Any interesting trades around this one?
On Tata Consumer?
Tata Consumer.
So the stock, and this has actually been a late stock to join the party on the FMCG side, but today is some kind of a breakout which has happened over here. The weekly charts look very good. The last weekly high was around 1160. So that should be the minimum target. We should, reach that, possibly cross that. But broadly, the way the charts are set up on the medium term and the longer term basis, I think we are looking at an all-time high of 1200, 1220 range being revisited. Above that can also go, but for the time we'll keep that as the target.
Okay, got that. In fact, Manglam is now joining in. And before we get chatting about Urban Company and its very strong debut in Dalal Street, Manglam, Tata Consumer, what's the news?
So the interesting thing about Tata Consumer, like Mitesh pointed out, it's not been a big participant in the FMCG rally that we saw post the GST cut announcements or before that as well. But the important part is that what really drives the stock are some of the commodity prices, and the key commodity for them is tea. Over the last year or so, there has been, very high inflation in tea prices, and as a result of which their margins were compressed. The management had told us that time, post the first quarter numbers and the fourth quarter numbers as well, that they will await, the new crop cycle to come by to give a forecast on how tea prices are likely to trend going forward. And for them, a decline in tea prices would mean margin expansion, and that's what the street is now betting on. Because what we understand is that, the new crop for tea has been fairly good. That's the inclination that we got from, the industry as well as the management. And they said that 8 to 10% decline is what we're seeing in tea prices from the highs. So that's positive for their raw material and, their overall margins going forward. And importantly, tea volumes as well, as during inflationary periods in tea, people downtrade. And now if tea prices are coming down, people will uptrade and buy some of these branded products as well. So all these factors doing well for Tata Consumer, along with the fact that the stock hasn't moved much.
But yesterday, I think Tata Consumer, the management did speak with a couple of journalists. I think this was somewhere in near Kolkata, if I'm not mistaken, and they alluded to the fact that tea prices are coming down, and they are looking to pass on at least some of that benefit to customers as well in terms of lower prices for their packaged tea products. That remains in focus. But let's get to the real meat of it today. When we're talking about consumer stocks, it has to be Urban Company, right, Manglam? What a listing! Dream listing really coming through. And we were discussing this in the morning. You were telling us anyway the stock has already reached 100 PE. So day one, first day, first show, 100 PE. What happens now? I know you heard the management commentary as well. So what stood out for you? Tell us more.
There are a couple of things that stood out for me. You said it's a dream listing. Let's call it a dream demand also for that company. The 1900 crore issue was actually subscribed by over 104 times. And typically, when there are such oversubscriptions that we see obvious oversubscription by the QIBs, by the HNIs and the retail, etc. What caught my eye this time in particular was the employees. That portion also got subscribed by 37 times. Now, this is a number that is not as high for all the other stellar IPOs that we see as well. At best, employee subscription is 5 times, 6 times, 7 times. If employees are gunning so much for their IPO, you know that the company's priced it fairly well. And we spoke with the management of Axel as well. The earlier investors in Urban Company, they said that they wanted to leave some value on the table. So they exited at a 27 times multiple. And now on day one itself, the existing stake that they have is sitting at a 45x multiple for Urban Company. The big trigger for them, valuations, typically what we see in platform companies is that analysts expect, the numbers to be a certain way. But if the companies turn the corner a lot faster than that, those numbers actually tend to outperform earlier estimates. We've seen that in the case of Eternal. We've seen that in the case of Swiggy as well, where analysts had to revise their estimates on EPS and growth parameters upwards, and that led to multiple re-ratings. So to that extent, just looking at that 100 P right now may not be the better metric. In fact, if you look at the total addressable market, the growth that the company is likely to put forth, and look at the other listed platforms. So Zomato is currently 3 lakh crore market cap. Swiggy is currently 1 lakh crore plus market cap. So if you compare to that on an absolute basis, Urban Company with a similar total addressable market is at around 25,000 crore market cap, despite the big jump that we've seen on the counter as well. So those are a couple of things I'll be watching out for. From what the management told us here on CNBC-TV18, 3 things stood out. The first one, they said they have a clear path to profitability, and very soon they will communicate with the investors when they come out with their quarterly numbers and the investor call that they will have. The second thing that they said is for Native, they won't rest until it grows 30, 40, 50 times more than what it is. And thirdly, most importantly, they want to become a home operating system rather than just a home services or a home product company. So that non-duality of product and service, but going on into product as a service, is something which is extremely interesting and unheard of, largely because there is no other player in the market as well. For Zomato, there was Swiggy. For Urban Company, there's no one.
There's no comparison. But yeah, I'm really glad you brought up the comparison with Eternal and Swiggy, because that's the best we can do right now in terms of trying and benchmark these businesses. So you mentioned market cap. Just purely on forward earnings right now, how are the 3 placed, and who's the fairest of them all and who's the most expensive of them all?
There is no fairest of them all when you're paying upwards of 60, 70 times for each of these companies, Surabhi. But it's funny because Zomato at 3 lakh crore market cap is still around 60, 70 times. We have something like a Swiggy, which is trading at a 40% discount to Zomato. So you back calculate that, comes to close to around 40 times or 45 times on that counter as well. This one trading at 100 times. But remember, Zomato and Swiggy have a stable business in food delivery, which is not likely to grow as fast as quick commerce. But for Urban Company, you have their own business, which is likely to compound upwards of 35%. The unorganized market here is, more than 99%. So there is growth out there as well. And apart from all of this, they are seeding newer vectors too. So very interesting to see how this space turns out from here on, and, whether there is any competition that comes in or not. So from a valuation standpoint, yes, this is pricier, but in an absolute value, it is still 1/4 of Swiggy.
Big difference in size also. Eternal's quarterly revenue is 7,000 crore. For Urban Company, last quarter Q1 FY26, the top line was about 360 crore. Thank you very much for that comprehensive explanation of what's happening with the Urban Company. But let's hear out now what the management had to tell us.
The right time, hopefully either in the first or the second earnings call itself, we will come out very, very clearly to investors with how long will that investment phase last, what is the capital we would like to deploy. I think today we are playing in many services, but not the end state of everything we can do. So in the end state, any service in the 4 walls of your home will very much be part of our ambition and our playing ground. And similarly, we are imagining a connected ecosystem inside your home of devices which have a strong affinity with our service ecosystem and our platform. So more than a services company, we think of ourselves as a home platform, and that's what we're building. It's hard to see it today, but I think over the next 10 years, this will play out. And we want to be the operating system for your home, the backbone for your home. I think water purifiers and smart electronic door locks are potentially only 2 or 4 or 5 such products that we could build. We will be calibrated. We recognize that this is a new turf. Even though it is related diversification, it's a new territory for us. We have to get it to scale. We have to make it profitable. But if I take a 10-year view, I don't think we will be limited to only water purifiers or electronic door locks. Native, as the brand name says, we want it to be natively integrated into your home, into your life. I can tell you that, look, we're going to be hard at work, and we're not going to be satisfied until we're at least 30, 40, 50 times larger.
All right, let's focus on the other stock that's been moving around in the last 1 hour or so after the government has doubled down on the objection to Vedanta's demerger. Ashmit has been listening in to the courtroom action. I tuned in for a little bit of time. Ashmit, it went on for a long time. Tell us, what are the key takeaways? The government's argument, what was accepted, and what was Vedanta's response?
Well, the government placing before the NCLT a whole host of objections that it has in terms of the conduct of Vedanta and certain issues with their respect to compliance. There are 4 key issues which they highlighted. The first is with respect to financial risk post-demerger. Government clarified that their concern primarily has to do with one of the demerged entities, which is Malco. The government clarified that this is a company that is likely to go into liquidation after demerger, that it has a worrisome cash balance position, going on to say that the total government claims is north of 16,000 crore rupees, and while that's secure in the hands of the parent company Vedanta, which itself has assets of over 2,000 crore rupees, Malco only has assets of 29,000 crore rupees. It in fact had a negative net worth as of 30th of March 2024, and all of these are cited as concerns by the government for the NCLT to see whether or not this demerger is a ruse to defeat the government's claims. That's concern number 1. The second concern is with respect to misrepresentation of assets. Here, what the government says is that there were certain hydrocarbon blocks that had been assigned to Vedanta for exploration. Here, what the government's concern essentially is that Vedanta has cited these hydrocarbon assets, these hydrocarbon blocks, which are owned by the government. Vedanta has cited as their own assets, and on the back of that have raised massive loans against them. This is something that the government has raised concerns about, saying that this is not permissible, that that Vedanta needed a government nod, that the government nod was never secured, and that this is a case of misrepresentation of their assets, giving a rosy picture. The third is insufficient disclosure. The government pointed out that they are in the midst of an arbitral dispute with Vedanta, that the government has claims of over 5,900 crore rupees, but nowhere in the scheme has that figure been disclosed, and that is something that has also been flagged. And finally, the government also saying that there's a strong case to be made for violation of SEBI's disclosure norms. That is something that the government said the market regulator may want to come in on. So clearly, 4 big concerns being cited, the government doubling down on its objection. Vedanta on its part, however, clarifying its position that as far as disclosures are concerned, they are in compliance with all statutory requirements. As far as approvals are concerned, going on to say that they have a NOC from SEBI, from the exchanges, the creditors, as well as the shareholders are on board, and also saying that as far as government dues are concerned, Vedanta is willing to go a step further, even to the extent of issuing a corporate guarantee to the extent of the dues that are being claimed by the government. So Vedanta putting its own defense forward, the government objecting to this. The next hearing in this case, we understand, will be on October 8th.
Well, that's right, Ashmit. Thanks a lot for that. So for the time being, the stock did react negatively, but there is hope, and that's why the stock has recovered from the low point of the day. Clearly, the commentary of the government is very, very, it's quite harsh actually to call it, because I personally went into that call and I did listen in as well, and they point out all these parameters where they have some objection, but also at some part of the hearing, there was that comment that did come in from one of the regulators that they're not against the demerger. And Vedanta has put forth various parameters out there, and they're willing to offer a corporate guarantee as well, a bank guarantee. Yeah. So that's why the stock has not completely collapsed, because if the demerger is off, then the stock will see a lot of selling. But from the lows, it's seen a bit of a recovery, because all eyes now will be on October 8th. And as we saw a few days ago, on the power asset at least, that case has got cleared, which clears one of the many hurdles. But otherwise, the government's comments, they definitely do mean business on this. So we'll have to see where the breakthrough does come about.
No, absolutely. I mean, hopefully with the Vedanta offering that corporate guarantee, offering to take
and they hinted the last time as well, both these two comments, whether it's with regard to the government's commentary or whether it's with regard to Vedanta's offer as well, both of them, even in the last hearing, both of them were, so this is a step moving forward for both of them. Okay. So we'll have to see whether or not there is some kind of, bridge that can be come to, and then the demerger can find its way. But that's going to be extremely important.
8th of October, that's a big date for Vedanta ahead. Got that. Okay, Ashmit, thank you very much for those details as well. Well, now let's move on and get to the big market and economy conversation of the day. And we have Nilesh Shah, MD of Kotak Mahindra Asset Management, joining in. A slightly special day. Nilesh, thanks so much for taking out the time this afternoon. We wanted to bring you in because it is a special day. The country is celebrating Prime Minister Modi's 75th birthday. And it's been a lot of stock taking, right? We're all looking at what the last 10 years have meant for the economy, for the market, and more importantly, what the next few years are going to bring. So let me actually start right there. A lot has been thrown at us, right? From COVID to, of course, the tariff issue to wars. Yet the market and the economy largely has been resilient. So, how would you sum up the government's response so far? And if you were to make one wish, to the Prime Minister on his birthday today for any future reforms or future steps, what would that wish be?
So, Surbi, undoubtedly, India has improved its ranking in global GDP order. We were 10th largest economy in 2014. Today, we are 4th largest economy and well on our way to become 3rd largest economy. Never before in a decade, India has progressed so much. So all credit goes to Government of India as well as citizens of India. One biggest driver for this, and there are multiple things, but one biggest thing from an economic point of view is path of fiscal prudence. India is the only major economy in the entire world whose debt to GDP ratio has come down between subprime crisis in 2008 and today, post-COVID crisis. No other country has resulted into deleveraging. India is the only country which is deleveraged. Households of India and corporate India has contributed in deleveraging. Government of India to fund COVID borrowing has leveraged itself. But collectively, we have deleveraged, which no other country in the world has done. This path of fiscal prudence, which is courtesy the Prime Minister, is probably one of the reasons why, despite so many things being thrown at us, our economy and markets have been resilient. And one request to the Prime Minister to ensure that the Viksit Bharat is achieved earlier rather than later will be improving ease of doing business. Surbi, today our entrepreneur is like Kalyuga Abhimanyu. They are born into Chakravyu. And not only they fight with Kauravs, which is markets and ups and downs and volatilities, many a times they fight with Pandav because there are so much of compliance burden. So many things we can ease. We can free our Abhimanyu to fight Kaurav. And what has not happened in Mahabharata, where Abhimanyu couldn't break the Chakravyu, under Honorable Prime Minister's leadership with ease of doing business and investment, I'm sure our entrepreneurs will break the Chakravyu to make Bharat Viksit Bharat.
Oh, very well put, Nilesh. And may as you're saying, the Kalyuga Abhimanyu, may he go on to conquer the world, right? Because that's where the focus has been. I mean, the government's focus, Prime Minister's focus on schemes like, Atmanirbhar Bharat, the PLI schemes, Make in India, manufacturing, China +1. So a lot has been happening for India Inc.
Indeed, Swami Gandhi Ghosh, Group Chief Economic Advisor, State Bank of India, is also joining in. Soumya, Modi has done a lot, right, as Surbi was pointing out. But the question is, what's the roadmap for the next few years, from 2024 to 2029? In terms of reforms, what is it that we can realistically expect? We're already seeing a tilt towards consumption over capex. It's going to be balanced, but there is that bias towards consumption now, a recovery at the mass end. What would your, the roadmap be now, as we celebrate Modi at 75?
Thank you. I think while we must celebrate the journey which India had in the last decade, I think in terms of the future, India, we have done a lot of big ticket reforms in the last decade. The GST is one of the examples, the insolvency and bankruptcy code, the corporate tax cuts. So all of this has been great reforms. But one thing which we need to take it forward, I think in the next 5 to 10 years, I think the continued focus by the government under the leadership of Honorable Prime Minister Modi in terms of improving the ease of living for the common individuals and the business. In terms of the ease of living, I think the time has possibly come also to expand into areas of improving the lives of common Indian by the improvement in urban infrastructure. Because in the Indian context, that we have a government at the local level. So we need to ensure that the urban infrastructure also improves significantly along with the overall infrastructure which the government is building. And the second reform, if we can do in the agricultural sector, we have been trying to reform the agricultural sector. We have tried to move away from the agriculture to the allied activities in terms of the value chain. Maybe we can do some more in terms of the price discovery. There are other reforms also, but at this point of time, I think improving the lives of the common Indian through the improvement in urban infrastructure and possibly some reforms in the agricultural sector could be the next 5 to 10 years of the reform mantra.
Okay, all right. So reforms in agriculture, maybe better quality of life for citizens and infrastructure. We couldn't agree more, Soumya, especially being here in Mumbai. Really looking for better infrastructure in the coming years. Soumya, just on the point of the economy from here on and how a lot of global investors are looking at India as well. Do you think the bulk of the sting of it in terms of US tariffs, etc., you think the bulk of it has been mitigated with what we've seen on the GST front, the fact that there is still easing, and you tell us, I mean, maybe you expect more from the RBI as well. So, I mean, have we nicely offset the tariff impact so far?
Yes, I think that is also one important part. And another reform which I just forgot, I think that is also a part of the reform, is basically also to get rid of the government is doing in terms of the various regulations which the government is actually doing, I mean, to make it a more simplified and a rule-based regulation. Now, having said that, in terms of the overall uncertainty, I think on a lighter note, the certainty and uncertainty has possibly become the norm of rulemaking today. But I see positivity in all the uncertainty, which is looming amount. Hopefully, if the trade deal comes through and the GST reform which the government has done, I think no country in the world has seen a tax structure where all 28 states and the center goes together. And that's an element of the best example of cooperative federalism. So my sense is that once a trade deal comes through, and given the consumption boost and also the income tax exemptions, I think the private investment, which somehow has not led to the momentum, will pick up the momentum and hopefully will be able to achieve the growth rate of 6.5 to 7% plus on a consistent basis. Because I think the objective right now is to grow at 7% on a consistent basis. So we all are on one together in our journey towards a developed economy by 2047.
Soumya, thank you very much for joining in with your views, weighing in. And we request Nilesh to just stay on. We'll come back and talk to you about the markets. For now, slip into a break with the news that the Nifty's managed to climb back above 25,300 and its banks all the way. The Nifty banking index continues to climb higher and higher. Get into a break. We'll come back. Welcome back. Up about 85 points on the Nifty. So building on to the gains from yesterday, there was a minor dip about 30 minutes back, but the markets are moving on. That dip has been bought into. Let's see what happens in the last 30 minutes. The big event to watch will be the two-day FOMC meet, which concludes. It's pretty much a given, perhaps, that a 25 basis points rate cut is coming. Markets have priced it in, but the question is pace of easing thereafter for the next 12 months. So investor focus will squarely be on that. We're in conversation with Nilesh Shah. Nilesh, we were just discussing the markets, and you said that once perhaps this trade deal, we get any positive sound bites, and the trade deal is out of the way, markets could see a bit of a leg up from here on. What should we expect, considering markets haven't done anything for the last 12, 13 months now? It's been very sideways. What is your own view for the next 12 months for our markets?
So our markets have done exceptionally well over the last 5 years post-COVID, and there is a need for consolidation. Markets are driven by three things: fundamentals, flows, and sentiment. If tariff deal works out, sentiments will become positive. Fundamentally, we are trading at reasonable premium to our emerging market peers. So re-rating of our market looks difficult. Whatever will be the earnings growth will probably result into return to the investors. And earnings growth right now looks like for the coming years in the trajectory of high single digit to low double digit. What can move the market is the flow. And this is where there is a tug of war going on. FPIs by and large have been sellers over the last couple of years. They are underweight India, and they are likely to tell domestic investors that, you are sitting in a wrong train. You should be booking profit. Indian markets looks expensive. On the other hand, domestic investors have continued to buy not only what FPIs have sold, but also what has come by way of primary supply through promoter selling, private equity exit, and sometimes even global companies coming in, booking profit here. By and large, they are overweight India. And at this point of time, they look like that their buying will continue. This tug of war is going to determine what happens in the market. If FPIs convince domestic investors that our markets are expensive, then there will be slightly longer period of consolidation. If domestic investors can convince FPIs that you have missed the train, and India is a market where exit is easy, but entry will be difficult, then who knows, we could see a rally. So from a fundamental point of view, you need to moderate your return expectations to earnings growth, but flows can surprise on either side.
Well, Nilesh, good to see you win on this big day, our Prime Minister's birthday. And, over the last 11 years or so, the equity cult that's been developed in India is something that really stands out, right? The kind of flows that we're getting on a monthly basis, the evolution that we're seeing. I recall, when you told Surbhi a month or so ago that keep in mind this month the flows are going to be rock solid when we were quizzing you about it. And bang on. So good on you on that. Do you see that the flows are as strong as of now? And also, if you could give us a sense about the liquidity that the industry is sitting on. I think they were sitting on ample liquidity, 5.5% or thereabouts. Break it down for us.
So, Nigel, this month also flows looks reasonably strong. We have to break these flows in three compartments. One is the SIP flow. By and large, that is continuing well. Now, of course, there are people who will try to talk about net SIP without understanding that as the SIP AUM grows, some people will book profit and hence the SIP flows will fluctuate. The addition on SIP looks fairly strong. The second thing is the lump sum flows. By and large, retail investors, thanks to their mutual fund distributors and advisors, have developed habit of buying on correction and selling on rise or booking profit whenever they believe market has risen. So this SIP plus lump sum flows continuously plays a part in regular flows to the market. The third flows which we have started witnessing is overseas investors now investing via various structure, including Gift City. It's a small beginning, but who knows where this can lead. So overall flow-wise, we still believe there is reasonable amount of flow. At Kotak Mutual Fund, we don't take any cash call. We believe our clients are doing their asset allocation, and they have given us mandate to invest into equity market and trying our best to outperform benchmark indices. Of course, there are other fund houses who take a different view. Now, collectively, mutual funds will be sitting somewhere around 4 to 5% of their AUM in cash. But Nigel, we have also created a product category called Balance Advantage Fund, Asset Allocation Fund. As valuations become cheap, we can increase equity allocation in this fund. As valuation becomes expensive, we can sell and book profit. The combined cash availability in asset allocation and balance advantage fund will be somewhere around 1 lakh crore. So not only mutual fund industry is sitting on a 4 to 5% cash in their pure equity fund, they also are sitting on about a 1 lakh crore space in case FPIs becomes desperate sellers and start selling at a cheaper and cheaper valuation.
Okay, so it is that domestic flow story. It's been like the lighthouse shining on troubled waters or dark waters. Every time there's market volatility or the foreigners are selling, it's that lighthouse, glowing bright with retail investors coming to the market. And I mean, now there's a new category, Nilesh, SIF, the new 10 lakh rupee category. And maybe next time you're with us, we'll talk about that as well and see, how that can add more meaningful money to the market, perhaps. Thank you so much for joining in. Great conversation as always. And you have a great rest of the day. That's Nilesh Shah with the market. Market which has been range bound today, but as always, it's time for action. So when it's time for action, that means it's Hormaz in the house. As usual, he has his list of buzzers ready. Hormaz, what's on it today?
Start off with some alliteration today in the list. The company is called Consolidated Construction Consortium, and the stock is up for the 4th day running. And in these last 4 sessions, the stock has risen almost 55%. And over the last few trading sessions, take a look at the volumes at which the stock is traded in. Almost range from around 3 crore shares. Today, we have had around about 75 lakh shares that have been traded on the company, and the 20-day average is around 45 lakh. Of course, that is because of the volume acceleration that we have seen over the last 4 trading sessions. Interestingly, ICICI Bank has stake in the company. It holds close to 9% stake, which it had managed to convert a part of its debt into equity in 2015 as part of its restructuring plan, and as a result of which it still manages to hold this stake in the company. Footwear stocks have been on a bit of a move the last few sessions. We highlighted Mirza International earlier in the morning. Khadim is not far behind either, and these are 11.5% today, was up yesterday as well. So now 25% in the last 2 sessions. Today's volumes have already crossed yesterday's volumes. We've had close to 6.5 lakh shares being traded today. The 20-day average is only 40,000 shares. The stock has now broken above its 50 and 200-day moving average, and as a result of this move, the stock has all but turned positive for 2025. DCM Shriram has sprung up on the list of gainers today and snapped a 5-day losing streak yesterday, and it's building onto those gains now, 13.5% higher on the stock, and it is gained on very strong volumes as well. Now, the volumes today are the highest in the last 2 months. We have had over almost close to 9 lakh shares that have been traded already, compared to a 20-day average, again, of only 40,000 shares. And over the last few sessions, the stock has consistently been taking support at its 100-day moving average, and it has now also crossed its 50-day moving average, courtesy the sharp spike we have seen in the last few minutes. And lastly, On-Mobile Global is on the list. It's declined. The move that you have seen today, 9% higher, but it's been an outperformer through the month, has declined only thrice in the last 14 sessions. The biggest single day gain since May. Volumes are the highest since July of last year. We have had close to 1.5 crore shares being traded on the stock. The 20-day average is only around 4 lakh shares, and as a result of this move, it has trimmed its 2025 losses down to 5%, but has been an underperformer, was down close to 40% last year as well.
Thank you very much for that. I was just looking at On-Mobile's revenues. In FY14, the revenues were 865 crore. And for the last 5 or 6 years, revenues have ranged between 500 to 600 crores. So basically, it's done nothing. And compared to what it was 10, 12 years back, the revenues have actually fallen quite a bit. 865 crore down to 573 crore. Thanks, Hormus, for that. Let's get to our D Street Chatter segment. Nimesh will get us his insights into what's happening in the dealing rooms. Nimesh.
Hi, Rimana. So as expected, the short covering rally about 25,200 continues in today's market. And as I said yesterday as well, if this short covering rally has to happen, watch out for the PSU names. And that's exactly what has happened today. The entire PSU basket is buzzing, but within that, I guess it's more of a short covering rally in many of those PSU names today. PSU bank stock stands out today. The index is up 2.5%. And there, I understand there is a bit of buying interest as well from institutional investors. So that's one space which stands out both on back of short covering as well as some buying as well. Overall, the flows are mixed. Unlike yesterday when the feedback was that there is buying, today seems to be a mixed day as far as institutional flows are concerned. But what we're seeing today is a clear short covering rally that is largely led by the PSU names.
Okay, all right, got that, Nimesh. What about individual stocks? What's in your radar?
Compared to the PSU name stocks, it's a different story in the private banks. So the first stock is AU Small Finance Bank. That stock is under pressure today, and the volumes have picked up in the last couple of days, essentially because I understand one large long-only fund has been an active seller in AU Small Finance Bank. So that's the first stock. Second, BEL and IDFC First Bank, both stands out in terms of very high delivery-based buying today. So expect high volumes and high delivery as well in both those names, BEL as well as IDFC First Bank. And the last is SPML Infra. Again, the stock has been consolidating in a narrow range. The company has been reporting a lot of order wins. And similarly, the buzz is that maybe a couple of more order wins are likely for SPML Infra in the next coming few weeks.
Thank you very much for that. SPML Infra down 1.5% today. Not done anything in the last 1 year. Pretty much flat. Let's get into a break on that note. Come back with more BTST calls from our experts.
Welcome back. So the Nifty is managing a 90-point up move. Let's find out what's happening in the F&O market. Nigel, what's the latest there?
Well, you know, in the last 2 months or so, if the bears believe the story was playing out for them, now it's playing out for the bulls. Because you just take a look at the Nifty, that's holding with a gain of close to 90 points. But the bigger story actually is playing out on the Nifty Bank, because that's not performing in line now. That's actually outperforming what the Nifty is doing. And today it's very, very clear. You look at the index, you're seeing there is a short covering bounce that's playing out on the Nifty Bank. And that was the largest constituent which wasn't participating till now. So that, you know, finding its way is very, very good news. But the other big component is the Reliance Industries. That lost its way a little bit, but just take a look at the stock. You know, if you pull up a couple of those moving averages, the 50 as well as the 100 MA, it's got into that zone. You know, 1,425 could spell a bigger short covering bounce that could play out on Reliance Industries. So I'll keep an eye out on this particular stock. Moving to the PCR, that was running away. It went to around 1.35, 1.4 earlier today. But from there, it's cooled off, which is a good sign. Normally, when the PCR moves to around 1.6 is when the markets cool off. So in the bullish perspective, cooling to sub 1.2, that's pretty good news. How's that happen? The 25,300 put, well, that's seeing a lot of open interest build up. But just take a look at the premium. The premium is down close to around 40% today, telling you the kind of aggressive writing that we're seeing at that strike. If you look on the upside, you know, the 25,400 call, that's seeing a good amount of open interest build up, and the premium as well has moved up. There is mixed activity that we're seeing at these levels, because at the start of today's trading session, the premium out there was around 70-75 rupees or thereabouts. So if you look at the range, well, on the downside, the 25,150 mark, which is the mark that I pointed out earlier today as well, that becomes the near-term support, 25,050, 25,150. However, the next leg of the up move comes once we get past the 25,500 odd mark. The Nifty Bank, I said, is finding its form. It's seeing a bit of a short covering bounce. Now the 50 and the 100 DMA is in this vicinity. By the end of today, you'll want it to go up around 100 points or thereabouts, because it's pat in line over there. Just take a look at that. 50 and the 100 DMA, that's within kissing distance. Moving to stocks then, you can see, you know, HFCL. That's a stock I'm keeping a close eye on, because big amount of open interest, unwinding or covering is what we're seeing out there. And just the last time I checked, the open interest as a percentage of MWPL has come down below 80%. So the probability that stock comes out of the F&O band. So that's the important stock to track by the end of today. You're seeing short covering taking place on two stocks, KPIT as well as RVNL, both those stocks higher, open interest lower. And finally, some long addition is what we're seeing on Tata Chemicals as well. So that's a stock you should be keeping on your radar. But HFCL, that's the one that could exit the F&O band. So that's the one on the radar. Back to you.
Okay, all right. So those are some of the stocks to keep on our radar. Let's quickly move on. We've got, I think, Mitesh with us. So good time. Yeah, last 15 minutes to go. Good time to take in some final advice and calls. Mitesh, on the index and any final stock ideas?
Yeah. So we on the index, I think, you know, we've kind of again come back after coming out slightly from 25,350. The structure is positive. I was hoping for a bit more decline to buy into it, but for the time being, as long as we don't get closing about 25,350, I would wait it out maybe tomorrow morning. But on the stock side, Ambuja, I think, you know, has come on the radar for a BTST kind of punch near the day's high. So take a stop at about 578, 577.5, and 590 could be a good target. And AB Capital, you know, after a big rally, I think first signs of profit booking over here. So STVT is what I suggest on the charts of AB Capital. Keep a stop just above levels of 286. Look for target for about 279.
Okay. All right, Mitesh, got that. Thanks very much. You have a good, restful evening, and we'll see you in the market again tomorrow morning. Let's actually put the spotlight on some commentary that we got from the SEBI chief today, particularly when it comes to the commodities market. SEBI Chairman Tuhin Kant Pandey has batted for deepening India's commodities market by increasing the participation from institutional investors. Listen in.
Strengthening India's commodity markets is high on SEBI's regulatory agenda. We have, in fact, I would rather say, development agenda. We have already constituted a committee to recommend measures for deepening the agriculture commodities segment. We'll also constitute a working group for developing the non-agricultural commodity space, including metals. Enhanced institutional participation will bring in higher liquidity, making the market more attractive for hedging. We will keep working towards a regulatory framework to enable prudent institutional access to these markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets.
Okay, so that was the SEBI chairman talking about the next steps for the commodity markets. Well, the big global story, of course, is going to be the Fed meeting tonight, and all bets expecting at least a 25 basis points rate cut, if not more. We have CNBC's Steve Leisman joining in with the details of the Fed expectations.
Considerable disagreement among respondents to the CNBC Fed survey, not over what the Fed's going to do, but what they should do, and growing concern over President Trump's intentions for Federal Reserve independence. Here's the Fed expectations chart. 97% think the Fed's going to cut by 25, but only 41% think the Fed should cut by that amount. 62% say Federal Reserve Governor Cook will remain on the Fed. In other words, the president will not be successful, is the expectation, in firing her. 55% say CEA Chair Stephen Myron's unpaid leave from the CEA chair is inappropriate. And 82% say President Trump is trying to limit or eliminate Federal Reserve independence. When it comes to what respondents believe the president's intentions are for Fed independence, 41% say limit it, 41% say eliminate it, just 10% think the Fed is supporting it. For the record, Treasury Secretary Scott Bessent and Stephen Myron have supported Fed independence in public comments. But the effects of these presidential actions, 68% believe it will lead to higher inflation, 57% believe it will lead to higher unemployment, 54% believe it'll lead to lower economic growth, and a division there over whether it means higher or lower interest rates, but 74% say it will mean a lower value to the U.S. dollar. Okay, what about when it comes to the meeting today? 41% think a 25 basis point cut is appropriate, but 28% think the Fed should cut 50. 28% say the Fed shouldn't cut at all. This mirrors disagreements we know about on the Fed over the right policy in the face of somewhat higher inflation, but flagging job growth. Our 29 respondents put the current 2025 year-end funds rate at 3.6%. That's down about 30 basis points from our July survey, you can see there. And then a pretty good drop for 2026, down to 3.13. What's important about that number is the long run rate is 3.2%. So the belief that the Fed gets relatively quickly by the end of next year to the terminal or long run rate. Last night, as you said, an appeals court cleared the way for Fed Governor Lisa Cook to remain on the Fed board, rejecting the administration's attempt to overturn an injunction on President Trump's firing. And CEA Chair Stephen Myron approved by the Senate. So a full slate of 12 voters will take up the issues, not only of what the Fed does today, but what it signals for future policy. Worth pointing out, there's little sign of these concerns about Fed independence in either the bond or the stock market, and I suppose that's another conversation to have.
Welcome back. The mid-cap index may be flat, but so many individual stocks are shining. Shrinkar House, the other stock that debuted on Dalal Street, the House of Mangalsutra, 12% up on that. Mirza International, 13%. Premier Explosives has had an explosive move since morning. Stock has been higher and it continues to maintain those gains. On Mobile Global, a stock that Hormus was earlier highlighting, it was down last year, but today it's up nearly about 10-odd%. PC Jewelers, India Pesticides, Banco Products, Red Tape, Bellrise Industries. And Bellrise Industries, there was an investing note. 5 minutes left. Mayuresh Joshi is now joining in on the show. Mayuresh, the stock of the day undoubtedly is Urban Company. Those who got in the IPO got lucky, but for those now, who are still waiting to buy this company, what would the advice be?
Afternoon, Rima. So I think for those who are wanting to buy, obviously you have to wait for declines to come through on the stock. For those who are having it, I think it really depends on your risk reward. If you're probably looking at a very short-term window, partial booking makes sense. However, I think the comments that the management has probably put forth in terms of creating a full value ecosystem as homes are concerned, and probably homes being the driver going forward in the next few years, I think that's very positive. But I think it's going to take a long periodicity of time to probably ensure all the services that they probably got in mind get implemented amidst all the competition that might come through in the next few years. Obviously, their first element from a balance sheet perspective will be to probably ensure that EBITDA margins start propping up and profitability as far as bottom line is concerned. So in my own sense, I think anybody having the stock with a medium-term view can probably still ride the momentum. A short-term view will probably have partial profit looking done. Fresh investments, wait for declines.
What's a good good entry point for Urban Company? I mean, what kind of a decline?
No, so I think it's too premature, Rima, at this point of time. But again, I think our own sense is that let's wait for the first con call to probably happen. Let's see what their strategy is, what their vision is, and the numbers that they're putting through. And based on that, maybe even a 10% decline might be a feasible entry point, or maybe even larger. So it all depends in terms of what they probably give out in terms of their guidance.
All right. What about Bellrise, Mayuresh? What's the view on that one? Bellrise, the stock, I think, came with the IPO at around 100 rupees ballpark. In a few months, the stock is at around 155 rupees. I recall Jefferies, I think, was quite bullish on it. Investec has come out with a note as well. They as well are quite bullish. At around 160 rupees, what do you think? Bulk of the good news in the price?
Absolutely, Nigel. First of all, I think a belated birthday to you. I think I missed you.
Thanks a lot, Mayuresh. Thank you.
But yes, I think the valuations are a tad bit clearer as we speak. And therefore, I think it really depends on the numbers delivery that Bellrise can probably give in this quarter, the guidance that they probably give us or the street as well. And on that belief, I think the stock might probably sustain its premium valuation. So in that regard, I think wait for declines to come through.
Okay, that's Bellrise in focus. Mayuresh, hi, good afternoon. Good to have you in. What about the listing of the day? Now, those who got into Urban Company, I'm not saying calling their services, I mean, the ones who've not gotten it, what else? When beyond this, should you go back and look at other platform companies? You still have the Swiggies and Zomatos of the world. But it's very clear that this is a very, very active space. How are you looking to play it?
Afternoon, Survi. No, absolutely. I think the tech companies, fintech companies is something that are going to do phenomenally well going forward. And I think a clutch of them will probably do well. So I think out of all the companies that you've probably got, I think valuations probably are sky high as we speak, based on the assumptions of blue sky horizons of projections that one is probably looking at. But as I said, for Urban or Swiggy or Zomato in my previous interactions as well, I think valuations are a tad bit too much in terms of how the stocks are priced at this juncture. And they're priced to perfection in terms of numbers delivery. I think 1 or 2 quarters in terms of a numbers miss and the de-rating can be pretty harsh in terms of where they are standing at this juncture. So optimistic in terms of the space, but I think valuation discomfort is something that is bothering us at this juncture.
Okay, all right. Mayuresh, thanks a lot for that. Request you to stay with us. For the time being, we're almost done with market. So let's do a quick recap of what went on in today's trading session. The Nifty goes on with good gains, close to under 100 points return is what we are seeing on Prime Minister Narendra Modi's birthday. The Nifty up 100 points. The Nifty Bank doing a little bit better. That was up 350 points in today's trading session. What led the way? From the banking names, you had SBI that was up and about in today's trading session. Kotak Mahindra Bank as well went home with a gain of close to under 1.5%. Besides the banking and financial names, you had Tata Consumer that was up 4%. Big move is what we saw out there. BEL, they're winning a large amount of orders. The street likes it. That stock was up. CLSC upgrades Ultratech Cement. Stock goes home with a gain of under 1%. What didn't participate? You had Bajaj Finserv that was down close to under 1%. Titan was down close to under 1%. Hindalco as well was down close to under 1%. And since the metals came in for mild profit taking, you had Vedanta that had an added spoke to it because you had the demerger, the NCLT hearing of the demerger. We didn't get any favorable outcome, and now all eyes are on October 8th. So the stock actually ended down with a cut of around 1.5%, but actually recovered close to 2% from the low of the day. From the broader markets, the stock that really grabbed everyone's attention was Urban Company. Big bombastic returns is what we saw today.
Indeed, closing up 63% higher on that. The other notable movers include Shrinkar House, the other new listing on Mobile Global, PC Jewelers, Bellrise Industries, KNR Construction. Many PSU banks were higher in trade. In fact, Bank of Maharashtra, PNB, State Bank of India in the frontline pack, Canara Bank. PSU banks continue to see a lot of interest. On the way down, you had softness in Vodafone Idea, retracing some of yesterday's up move. NHPC, Ola Electric ending in the red. All in all, the Nifty closes well, higher again, up about a third of a percentage point at 25,350. The sensex at 82,700. It's a wrap and closing bell. Don't go anywhere. Markets Forward is up next.